Chief Investment Officer of Portfolio Asset Management, and Harry Rady, CEO and Portfolio Manager at Rady Asset Management. Gentlemen, good to have you on the program. Welcome.
Thank you.
Thanks, so, how do you invest then in an environment where we have seen the market trade up as much as it has, and a lot of people are debating whether or not the fundamentals have actually truly turned a corner?
Well, I think that the first thing you have to do is you have to have some short ideas. Today, we really loved our position in SCC, which is an inverse ETF that goes against the retail services sector. But there are a few things that you need to do. I think you need to keep your trade short. You need to keep your stops tight. We like oil services. We still like consumer staples. I got a lot of hate mail on that last week, but we were able to take some profits on Unilever. We doubled our Pepsi position. And REITs are starting to finance their balance sheet. I still think some of the fundamentals stink, but when people are looking to rotate their financial sector or their government aid plays, I think they're going to look at the refinance balance sheets of the REITs, and I think it could go higher. We're long URE, it's leveraged, and we think it's a winner.
Did you say you got hate mail on consumer staples?
Yeah, I think a lot of people think that trade is dead. I know, I got to get out of my cave and out of the screen, Maria.
Consumer staples caused hate mail. What are people upset about with regard to consumer staple? Why the hatred?
Well, I think the thing is a lot of people think that now that we've had this recovery, that you need to get out of those defensive names. Okay. That, for instance, I'm not going to go against a Walmart tomorrow, but I still think the general sector. But again, Pepsi's one of the only consumer staples that haven't done anything. Today, we doubled our position in that. And all I have to say is my Unilever's up 20% in a couple weeks. And a lot of analysts say that, you need to dump all of that and start looking for growth opportunities. I don't think we're going to be ready till 2010.
So there, you got the Unilever to back you up. But do you agree with that, sir? Let me get you in here. Tell me how you're investing in this environment, Mr. Rady.
We agree with some of the things, but we see real opportunity on the short side. And I got to tell you, last week we were scratching our head a bit, because we've been sort of pounding the table on being on the short side over the last couple of weeks. And now we're feeling a little redemption coming and feeling good about things. So we think cash is king. And we really like consumer discretionary on the short side. We just think expectations are too high, and that this cycle is going to take many, many quarters and possibly a number of years before we get through this. On the short side, we're short AutoNation, which is up 400% in the last 60 days. We're short J.Crew, which is up 200% in the last 60 days. And we're short Green Mountain Coffee, which is up 300% over the last 4 or 5 months. And these valuations are getting very stretched. Now, on the long side, we see opportunity in the drug and biotech space. We think that people will continue to age and get sick, and we've just established a position in Endo Pharmaceuticals, trading at $16 with $6 a share in cash, 6 times earnings, and 1.5 times sales. We think that's a really good buy.
All right, gentlemen, great conversation. We so appreciate your insights. Thank you very much.
Thanks.